Hi there, welcome to my YouTube channel. So today we are going to talk about the challenges that cryptocurrencies or crypto transactions or crypto payments make, bring about for accountants in corporates or in companies. So this is very relevant because increasingly crypto payment is becoming the norm, and as a result, it becomes very important for the company accountants to account for the price fluctuations and hence ascribe a gain or a loss on the profit and loss and the balance sheet of the company. And hence, it is very crucial for all of us to try and understand the complicacies or I would say the limitations in the accounting system in this particular case for cryptocurrency transactions that they need to deal with. So hence today's video is on the challenges that it faces, the accountants face because of cryptocurrencies, and what are the real aspects of these kinds of challenges is what we will talk about today. So before we do that, please like my videos, please subscribe to my channel, please smash that notification bell so that you know every time I upload a new video. Please comment on my videos, and please share my videos with people who you think would benefit from my research and from my analysis. So let's dive in. So before we dive in, as you know, I have a free ebook. The ebook is on my journey as an entrepreneur. Its titles Six-Figure Corporate Job to Master Entrepreneur. It talks about the challenges I face and now how I overcame those challenges. And today I have a company in Singapore, I have a company in India, and representations in the US market. The book also has 3 worksheets. Now, I've developed those worksheets so that you could gauge your chances to be an entrepreneur. So you could score yourself based on those answers that you give on those worksheets and see where you stand in terms of becoming an entrepreneur, your chances of success. The cool thing is I have scored myself, so you would know how much I've scored, and you then know how much I have been successful. So that's an indicator. The way to get this book is on my website. It's flashing. The link is flashing on the screen. I'll put that in the description box below. Please go ahead and put down your name and email address. The link to download the book will be emailed to your inbox. I hope you like the book. So now let's dive in. First, let's look at what are stable coins and why are they important. The first things first. Many corporates are realizing that the retail customers are becoming more comfortable with holding cryptocurrencies. Now, that has been the story the world over. I've spoken about one company, one startup in India, in New Delhi, Rug Republic, which has decided to accept 20 cryptocurrencies. So you will see that video of yesterday. I'll put that in the end screen, and you go take a look at it. And like the Rug Republic, there are many such startups and companies who are accepting cryptocurrencies. They are looking for other avenues to use that rather than just investing in it. So these people who hold cryptocurrencies are looking for other avenues to use the cryptocurrency rather than just investing and then taking the money out when there is a profit. Can these corporates limit their customers and say that they will only accept regular payments? No, they can't. They can't really do that because there are retail customers who are looking to put in cryptocurrencies to buy certain products and services, and these corporates cannot restrict and cannot tell them, no, we don't accept cryptocurrency. It doesn't look nice. At the same time, if they say yes, then it makes them look like a more forward-looking company, and which is a good thing. So as the value of assets like Bitcoin and Dogecoin rise, customers aren't likely to pay in these cryptocurrencies. Now that's a good point to make, that if these assets rise, then customers are not likely to use these cryptocurrencies to pay for certain products, services, because if it rises, the customers would feel that in the future they have lost money, they paid more for a certain product. So stable coins are the answer to that. So stable coins try to peg their value to some external reference, like a national currency, let's say US dollar. Hence, they are less subject to volatility because they are pegged against a dollar or a certain currency, a local currency, and you usually use a local currency to pay for, to buy a certain, to purchase a certain product or a service. Hence, it's almost at par with using a local currency. When you are in a particular asset class like Bitcoin, the theory is that it will continue to rise in value. And if you see even today, the Bitcoin has risen. It's actually went past 40,000. And that's a big jump, given that it was really struggling at a low 30s. It does not make sense for a customer to pay in an asset that is growing, that is going to increase in price. They will look for alternatives. So that's the premise that I was talking about when I said that if the price of Bitcoin goes up and you've paid using Bitcoin, then you would think that you have been cheated or you've lost money, you paid more, and you wouldn't want to be in that situation. More and more customers will prefer to pay in some kind of stable coin. That's going to be the norm. Stable coins are fast becoming an important piece in the basket of currencies, which is obvious. So now let's look at why us, what are the implications that you bring about. Now, companies please excuse me for the header here. I didn't change the header, but this is where I talk about the accountants, the problems that accountants face. Companies that want to get involved in the crypto world need to make sure they have the tax and the accounting system in place to handle it. Very, very, very obvious. Soon, smart contracts and programmable money will be used to elevate commerce, because that's where the world is heading. People are looking to use cryptocurrencies and digital money, programmable money, to trade across borders, cross borders. Cryptocurrencies can be complicated from a tax perspective. And why do I say that? Determining the value of something that is not fiat and that whose value is probably different from your base triggers a gain or a loss almost immediately as the value moves. So how do you attribute that gain or a loss? So let's say you've done a transaction today, but when you are doing the auditors are doing audit, or when you're doing the P&L, you never know where the price would be. If it's gone down, then you've lost money, so there's a loss. If it's gone up, then you gain money. Your profitability goes up. So while using an intermediary also who will be holding or eventually cashing out, companies need to do due diligence as they will be ceding a relationship risk to a third party. Would you want to do that? Would you want to cede your customer relationship to a third party who would actually be holding and eventually be cashing out the customer's money? So that's a relationship risk. On top of that, there is a compliance risk. These companies will also have to have a compliance risk when dealing with these intermediaries. So you have to bear in mind, let's say foreign exchange compliance, let's say, some other kind of risk or risk gauging. So governance. So are these cryptocurrencies in line with those compliances? Companies need to be careful that they are not being tricked into money laundering schemes by accepting crypto markets. So they have to assure the investors or the customers that then they are not paying into a money laundering scheme. Or let's say, it could be under the watchful eyes of FATF or any of those big daddies who are sitting there to look at on illegal money transfer, anti-money laundering. Some NFT owners have found that they couldn't even access the NFT once it was purchased, and the accounting for an NFT is likely to be complex because NFT is non-fungible token. So let's say you're buying let's say an artist's creation, and you're using so the artist is using the NFT, so it's actually it's been marked his property. Now, how do you assign a value to that particular asset when it comes to accounting? So now there is no such regulation, there is no process or a format or a best practice at this point in time. So something you need to look at. Not all NFTs are created equal, just like not all crypto is created equal. NFTs might be treated like other collectibles. So all these things need to be thought through before any company ventures into accepting cryptocurrency or any kind of digital asset, digital payment to transact or to sell their products or services. Their accounting processes, the methodology need to be in place. So the accountants need to really think about such transactions. And the last point, some companies are offering to pay their employees and directors in cryptocurrency. Now that's a stumbling block as well. How do you account for the money earned by these employees and directors? So if the cryptocurrency is dropped, then the money earned by them it's a loss. If they go up, it's a profit. So all these things have to be kept in mind when accountants give the nod to the companies to allow them to deal or have transactions with their customers in cryptocurrencies. But at the same time, the customers are willing to do transactions in cryptocurrencies. So the accountants really have to work really fast to get this in order, in shape, in place. So I hope this particular video was useful to you. I spoke about FATF. FATF is actually working on various regulations. So are the many different governing banks of different countries. I did a video on the FATF regulations. I will put that in the card above. Go take a look at it. So to end as a summary, it's the accountants really have to work fast to get the company's accounting processes and methodologies in place so that the companies decide to start accepting transactions or payments through cryptocurrencies for their clients, for their customers. And this really needs to happen really, really fast. So that's what is the conclusion of this video. So I hope you like this video. Thank you very much for listening to me. As you know, my name is Saurav Mukherjee. I'm a digital technology marketing leader with over 20 years of global experience. You will find my LinkedIn URL in the description box below. Go ahead and connect with me. I work with companies to look for solutions to their business, marketing, technological, and investment challenges. If you are looking to engaging me as your consultant for your company and startup, drop me a line on LinkedIn after you've connected with me, or you could write to me on the contact page of my website, whose URL will also be there in the description box below. And then we can jump into a conference call and see how we can work together. So before I go, please like my videos, please subscribe to my channel, please smash that notification bell, please comment on my videos, and please share my videos with people who you think would benefit from my videos. So until my next video, please stay safe and stay healthy. Take care. Bye-bye.